We're going to do a short video here comparing support and resistance versus algo trading, and we're going to show you first some support and resistance, and then we're going to also move down here and show you some variety of algo trading numbers that come from RBAM research. We have an S&P 500 chart up here. This is a Chicago Mercantile Exchange daily chart. It's got a 200-day moving average in blue, it's got a red 20-day moving average, and it's got a green 5-day moving average. Now there's a lot of ways to set up support and resistance, and we'll just look at two really simple ones real quick, and then we'll compare them to the algo generated prices for the S&P 500 that RBAM Research puts out, and you can compare them for yourself and see which one you think is better. Before we go much further, just want to say I think support and resistance has their place, or has its place. The problem is you can't generate a lot of different analysis for a lot of different securities before 7 a.m. the next morning. It just becomes overwhelming. So from a practical perspective, algo trading allows you to review tremendous amounts of securities with a computer and give you exact entry prices. So let's just compare the two real quick. We're going to first do resistance, support and resistance real quick. So the first thing we're going to do is look at this 200-day moving average, and we're going to compare it to price action. Now we can clearly see that the 200-day moving average is a number that these people are looking at. It's an indicator that the traders are looking at, because they're bouncing the S&P 500, which is the most liquid futures contract pretty much in the world. They're bouncing it back and forth around that number. That's not a coincidence. So it gets support on the way down, it bounces back up. Now, of course, it's not exact here, but it is definitely exact here. So you get resistance of it here, and you get it bouncing across a range of months here, January all the way to April. It's back and forth, the bulls and the bears fighting each other, using the 200-day moving average as support and resistance. So this is a classic example of how to use a very simple indicator, a 200-day moving average, which is a great moving average for a daily chart in the stock market and so forth. You can see how the bulls and the bears are fighting and literally making and losing fortunes fighting over, is it going to be above or below the 200-day moving average. So that's a classic example of support and resistance. Another classic example is a 20-day moving average. You can see resistance, resistance, resistance. It's just classic. You can see through here, resistance. This wasn't exactly respected, but you can clearly see the resistance. Same thing here. You can see that not so much touching it, but we have consistency and distance, and you can build algorithmic trading programs to show that that distance can be measured and can be used as a trading indicator of price against a 20-day moving average. So that's another classic example of support. Here you can see the same thing, the 20-day. Resistance, resistance, again, not perfectly respected, but everybody's watching that trading through the 20-day and selling it short if they're active traders. How do we know that? Look at the market collapse. So you can use support and resistance successfully. I have no problem with it. But the question is, how does it compare to algorithmic trading? So let's take a look. We're going to show you two different systems first. We're going to show you a 30-day trend following system, and we've got the S&P 500 E-mini futures contract here, and you'll see indicated today as a short position. All of this is for entertainment purposes only, but let's take a look at this for today, the 29th. It's indicating a short at 37.51. Now the chart I just showed you is not updated for today, but we can go back and take a quick look at it. It's for yesterday, but 37.51 is approximately right here. I don't think the market's traded there yet today, but it indicates a short here at 37.51. Now that came out last night. I'm talking to you today, the 29th, but that number came out last night a little after 6 p.m. and you can come in early to our website and see if they're updated. We tell everybody they're updated before 7 a.m., but a lot of times we've got them updated before 6 p.m. for most of our securities. This number came out last night before 6 o'clock. Gave you a firm price, of course, for entertainment purposes only. Got to do your own analysis, but 37.51 was a price you could have looked at for entertainment and said, hey, RBAM Research says to go short tomorrow at that price. I wonder what I think. A specific price. You don't have to wait on price action. You don't have to be subjective. This is a back-tested number. Does that mean anything? No, not necessarily. But you cannot back-test these types of situations. It's almost impossible to do a statistical analysis on how many times it bounced off of the 20-day or the 200-day. You can do it, but it's not the same kind of math, and it's not the same kind of situation. There's a lot of subjectivity. There's not any subjectivity to the calculation of this price right here. The only exception to that might be is we made some assumptions when we built the model. So this is an objective way to look at a price the night before, the morning before, and come up with a price and say, okay, I'll keep an eye on that price. Now that's the 30-day trend following system that uses moving averages, but in a much more sophisticated way than just looking at them on a chart. Let's go down here and look at our algorithmically generated entry prices that don't use a moving average. Again, SP 500 again out for this morning. Every morning they're going to put out buy or shorts, and today they put out shorts. This is 1, 2, 5, 10, and 20-day holding period. So this is more short range, short-term trading. You can use this column, the 2-day column, for shorts to day trade. You can use the 1-day column for buys to day trade. You're not going to see 1-day shorts on this program. There'll be 2-day shorts and above, and then the 1 and all the way up to 20 days are populated when it indicates buys. So again, could you come in here and look at this before the market opened or after 6 p.m. last night and say, hey, should I short at 37.64? Is that a reasonable number? And then do your own analysis. It gives you an exact number. And so that's what we think is the greatest thing about algo trading. It gives you exact numbers way before the market opens. In this case, way before, at worst case, 7 a.m., but these things trade overnight, so we put them up usually after 6 p.m. the night before. And it gives you these algorithmically generated prices. Now, here's the real benefit. I've showed you S&P 500. We cover 190 stocks, but 1, 5, and 20-day holding periods for buys only. And today they're mostly zero because the market's down today and the algo said, hey, don't buy today. But these are usually 3 to 4 days out of the week. These are all filled with buy prices. If you come down here, I've showed you the trend following system. We skip down to this. We cover crude oil. We cover gold. We cover Bitcoin. We cover S&P 500. We cover the treasury bonds. Here's the full list. Major forex pairs, BTC crypto, most liquid futures, and 190 stocks. So there's no way a human being can do analysis on all of those securities using support and resistance manually. It's just not possible. And so that's why we think in the contest between support and resistance versus algo trading clearly wins. Is it a better way to trade? That's up to you. But is it a better way to do analysis? We definitely think so. You can get access to everything we've got every morning before 7 a.m. and a lot of times in the evening before. You just have to check by following the link in the description below, going to rbamresearch.com and putting in your email address and signing up. Absolutely free, no credit card required. And you get, again, buys on the stocks, buys or shorts on everything else. If you like this video, please click the like button. If you want to subscribe, please do that as well. We'd love to hear your comments on what you prefer, support and resistance or algos, or maybe you like both like we do. If you look at our information, keep in mind that all of our opinion and everything, including our entry prices, is for entertainment purposes only. Can't use it for anything other than entertainment. You should always do your own analysis, and you definitely trade at your own risk.